artificial intelligence and the idea of generative AI is here to stay, and is going to have an impact on the way that we do business today. I think even consumers today are leveraging the free chat GPT features that allows them to be a little bit more productive in their daily lives. So I just think it's here to stay, and we, as an industry, we as professionals have to find a way to leverage those same tools to make ourselves better.
Hello, everyone, and welcome to another episode of CBS Spotlight. If you're here by mistake, you're in the right place now. I am Eric Alvarado, along with my co-host, Mr. Ted Hikes, and we are your friendly guide to the world of insurance and wealth management. And today, ladies and gentlemen, we have an industry heavyweight on the show with us. He is the head of insurance over at John Hancock and has had multiple leadership roles in his career and is just a fine human being. Mr. Hector Martinez. Heck, welcome. Did I miss anything?
I don't think so, although this might be the first time I've ever been called a heavyweight. But I do appreciate you, Eric and Ted, having me on the show. It's a blessing to be here with you guys. Thank you again for having me.
Appreciate it. Thank you.
So, Hector, I know that behavioral insurance is a unique focus for John Hancock. And obviously, Hancock is leading the industry, I think, when it comes to behavioral insurance. How does it really differentiate John Hancock from the other carriers in the space? And what are some examples of how it's benefited both the customers and the business itself?
Yeah. So I'll hit on 5 things specifically. I think the first thing that I would say is 10 years ago, this company had the courage, to your point, to partner with Vitality and bring that John Hancock Vitality product to market, which is we've been talking about here just a bit. But it really did change our perspective. Like, we went from a passive claims payer, which is essentially what life insurance carriers are. They assess the risk, they charge the right premium, and then if something were to happen, they pay the claim. And that's a passive claim payer. And now we're actively engaged with the clients. So 30 times a month, maybe more, clients are interacting with the Vitality app, and we've really changed. That's the second piece. We've made it fun to own life insurance. For people that are engaging in life insurance, in Vitality, there's this gamification that allows them to play a role in the activities they do and or do not do. I mean, my wife and I both own a policy, and I'm ashamed to say I lose to her generally every single day. Very rarely do I beat her. But it makes it fun to own our product. It's a completely different shift in what we've done. Yeah. And it's rewarding. You think about people taking 10,000 steps a day. On average, our clients and those that are engaged are doing things like taking more steps than they've ever taken before, sleeping differently than they've ever been before. And they're doing things like going to the doctor with some level of consistency. That even something that small is a reward within the Vitality program. And we know studies show contribute to a longer, healthier, better life. The fourth piece is really life-changing. In recent years, we've partnered with Grail, and we've offered the Gallery test to those that are part of the Vitality program and part of John Hancock Vitality. And we are getting numerous calls from clients, emails from clients into our marketing department that give feedback about how we have actually saved their life. Because this liquid biopsy that can detect 50 plus types of cancer early, and the amount of people that have spotted something before they would have ever spotted it before and saved their life is significant and is meaningful to us. So we're now no longer, I remember I used to say, our products don't save lives, but they change lives. We can now safely say that our products can save a life, which is again, flipping the ownership on its head. And then the last piece is something, Ted, that you said earlier. It's just an aligned value. It's a shared value. We now are interested, as you are, we're interested, as your loved ones are, in helping you to live longer, healthier, better. We're not hoping you do, we're helping you do it.
Yeah. And that's great. And that's something nobody else in the industry is actually doing or anything like that. So it's to see you guys take the lead role in that is pretty awesome,
Yeah, to be fair, and I think we lead the way. 10 years ago, we had the courage that I don't think any other carrier exhibited. I think you're starting to see carriers dip their toe in the water. I think what you're going to find, carriers are going to find that dipping your toe in the water is not enough. You've got you've got to have the courage to step in and say, we're going to change the way life insurance is owned. When we do that, and we're in a position now to then say, let's go change the way that it's consumed as well.
I love that. Yeah. I love two things that you said. The gamification, Hector. Like, I mean, I find myself doing that all the time. Like, was my resting heart rate better last night? Or did I take
Close them rings out.
yesterday? Yeah, closing those rings out. The other thing I think that's great about Vitality specifically is it kind of changes the conversation when the advisor is talking to the client from, it's a straight death benefit sale. What's going to happen till you die to, hey, look at all these cool tools because, as we plan for your future, this is a tool that can help you live longer. But, oh, by the way, when the inevitable happens, we're going to take care of your family. So I love that about Vitality.
I also think when I think about what advisors do every day, they help clients secure their financial future. And whether it's protection, whether it's accumulating assets so you could use them in retirement, what better combination when you think about a whole all-weather portfolio than to say, hey, when you're retired and ready to use these funds that we're helping you create, this wealth we're helping you create, how about if you're the healthiest 89-year-old that you've ever been and be able to expect? So could we partner with people to do that? We'll give you the money to do it, but we're also going to try to partner with you so you can have the health to enjoy it the way you'd like to.
So, Hector, we touched a little bit on AI before. So how do you see technology, I guess, as you go forward, continuing to shape the insurance industry?
Thanks, Eric, for that. I mentioned a little bit of this before, but it's worth repeating. And what I'm speaking about is mostly the John Hancock perspective, but I suspect that I share this thought with others as well. I think that artificial intelligence and the idea of generative AI is here to stay. And is going to have an impact on the way that we do business today. I think even consumers today are leveraging the free chat GPT features that allows them to be a little bit more productive in their daily lives. So I just think it's here to stay. And we, as an industry, we as professionals have to find a way to leverage those same tools to make ourselves better. I think the first thing I would say about that is supporting what I said earlier. I think that next best action and prioritization is going to be critical. And I think this allows us to be in front of the most important things and will continue to allow us to be in front of the most important things. And as an industry with as many bits and bytes that are out there, having the next best action could mean saving a life, could mean making sure somebody has the coverage they need, could mean that an advisor has a tool a little bit faster than they would have otherwise if we didn't, as an industry, organize ourselves that way. And I think that's what AI is going to afford us the ability to do. And I'm probably just giving you maybe a slim percentage of what it could actually be. It's probably going to have a significantly bigger impact than what I can imagine. I would say it's probably similar to the iPhone when it first came out, how somebody would have told you that you would have had in the palm of your hands the ability to do the things that you do today with an iPhone or another type of device. You would have thought they were crazy, but that was just 2006, 2007. So I think that's going to be similar to that. The last thing is sort of John Hancock's position on technology and digitization. We've never, ever thought about disintermediation of the advisor or distributors. Clients are looking to advisors for the decisions that they need to make. They're looking for advisors to guide them through the choices that are out there. And not about, do I choose this product or this product, but how do I leverage this financial instrument and this financial instrument to achieve their ultimate goal, which means we as a carrier are going to string together the best digital assets to put an advisor in a position to do exactly that, to be able to navigate the universe of product selection, to be able to access the products in an easier way, essentially to arm the advisor to do what they need to do to continue to solve problems for their clients.
So in your experience, what are the most common challenges that an insurance organization like John Hancock really faces when it comes to, different channels and the distribution within them? And how do you as a carrier address those in an impactful way?
I would say the biggest challenge is the complexity and differences, and being willing to lean into the complexity and differences based on the channel that you are serving, based on the advisors that you're working with. And then once you're in the advisor's office, once you're in the financial institution, understanding what it is that they do with their clients and the products that they typically access, et cetera. So the complexities and differences are significant, but need to be acknowledged. So now, how do you build a consistent client experience, a consistent process when each of the different distributors, each of the different advisors might be different in what they do and how they do it with their clients. So the first thing is trying to figure out what is in my case, the John Hancock way. So I mentioned this with sales earlier, but 70% of the customer experience, and I'm using 70%, could it be 65%, could it be 50%, but there's a consistency to the way that we want to deliver that doesn't differ depending on the channel you're in. Establishing those so then that way there is a way, there's a feeling, there's an experience when you walk through the John Hancock doors. That's the first thing. And then allowing for that other piece to be that customization and personalization, which truly will be. Think about the products you consume today. When you consume music, it's personalized to you. So leaving that 30%, 40% to allow for that personalization and customization to create that experience when you walk through the John Hancock door. So I would say the challenge is the complexity. The way you solve it is by trying to create the similarities, establishing as much of the similarities as you can, so you can then take a risk and say, let's create that personalization aspect with the remaining percentage. And then I think the last piece is once you understand that is adapting to the changes, because as soon as you're still and you think you've got it figured out, markets change, dynamics change from a tax perspective. Every 4 years in the country, there's a new regime that takes over. And what does that mean to not just the life insurance industry, but every single financial instrument they have in their plan could be impacted. So making sure that you're adaptable to what you do and you can change according to the sort of external factors.
Hector, what's next for John Hancock, and how do you plan to build on the long-standing success that you guys have in the distribution, product offerings, and innovation in the industry?
I appreciate that question, and it's probably one of the things that gets me most excited. I told you why I joined and some of the things that made me join, but I think why I'm excited about, as I look to the future, we're not all going to do this forever. But we want to look back at the things that we did and make sure that we had an impact. And as an insurer, as an asset manager, our shared value that I mentioned earlier, it sort of necessitates that we take a long view on the people that we partner with, on the distributors that we partner with, and truly make an impact on the way that people live their lives. And when I say longer, healthier, better, that's not something that Hector Martinez says. That's something that John Hancock wakes up every single day and thinks about. And you see it in our enduring commitment to the program and the products and the solutions that we provide. And I say that only because there are times that companies innovate, and that innovation helps consumers going forward, advisors going forward. Every change, every improvement that we've made to the platform that aids in the way that people can live and tap into that longer, healthier, better work stream impacts every single policyholder since the beginning of John Hancock Vitality. You bought one 10 years ago, you have access to the things that we do today, which I think is a testament to our commitment to that aligned value, that shared value, and our long view on the fact that if we can help our clients live longer, healthier, better lives, we stand to gain, but more importantly, they stand to gain, and those that love them most also stand to gain.
This has been an amazing interview. We appreciate your time and all of your insight. We're gonna throw a curveball to you that we throw to every guest that we have on here, and we're gonna see how you do. So the question is, if your role or John Hancock as an organization is a popular movie from the past, what movie would that be and why?
It's an interesting question, and I would say that this is my opinion, and given the amount of time that I have to think about it, I don't know that everybody would agree with me. Somebody's going to look back at this, listen to this, and say, how could you have picked that movie? So I think the movie I would pick is the movie 300. Now, many people may not have seen it, and frankly, I'm not that good at remembering certain things, but I do remember this premise. There was a scene in that movie where the Spartan army of 300 men showed up to the battlefield, and they were partnering with an army full of thousands of men that came to fight together, and they were fighting a bigger, badder enemy full of thousands of men as well. And the leader of the 1,000-person army looked at the Spartan leader and said, how could you dishonor the battlefield by bringing only this amount of men compared to what we brought? And so the leader of the Spartan army asked him, he said, asked him what he did for a living. And he said he was a farmer or something like that. He asked another one of the people in the Army what they did, and it was another career that they rode horses. I don't know exactly what they said, but they weren't soldiers. When the Spartan Army turned around and asked his army what they did for a living, they all chanted behind because they were only soldiers. And he looked at them. The Spartan Army leader looked at the other leader and said, "Looks like I brought more soldiers to the field than you did today." And I don't know that it's a perfect bridge to why I think about that, but I think about taking a finite resource at John Hancock. And there is not a day, there's not a week, there's not a month, there's not a quarter or year that we don't think about a successful year being the amount of people that we cover. So we've grown every single year, but every time we ask the question, are we covering more lives? So taking a finite resource and bringing it to as many people as we possibly can and not be limited. So we talk about technology. We talk about digitization. We talk about how we're going to leverage those things. And it's only for one reason. So we could put our tools and make it accessible to more advisors so they could bring it to more clients. So one day, when we call it quits, we could look back and say we've truly made a difference for many lives, for many families, or for whoever matters most.
Well, you win the day. That was a great answer.
Hector, that was fantastic stuff. Thank you so much for your time, your insights, and we really appreciate John Hancock and the partnership that we have with CBS and Hancock. For everyone out there, I am Eric Alvarado. This is Ted Hikes, and we are your friendly conversation about insurance and wealth advising come together. So thank you for tuning in. If you found this information helpful, please don't forget to like and subscribe, and we'll see you all next time. Thank you so much.
Thank you, guys.
Thanks, I appreciate you. Take care.